Hello, welcome. Thank you for joining us today for this edition of the Value Exchange. Before we begin, and I think as people are starting to filter in, we'll begin with a couple of just housekeeping items and introductions, and then we can get into sort of all the content here specific to advisors. So you'll notice there should be a spot for the audience to submit questions. Those are anonymous, and that'll be open the entire time. We have a few people behind the scenes on our team that'll be answering some of the specific questions that anybody has. And then we're going to save the last 15 minutes of this conversation for Q&A, where we'll pipe in some of those questions and bat around any thoughts or topics you'd like us to discuss that we don't get to during the prepared sort of portion of this discussion. I'll kick things off with intros from the Fidelity side, and then we can get to our guests that we have with us today. My name is Jack Newrider, and I'm a senior research analyst for Fidelity Digital Assets. Our research team, which of course I'm a part of, plays a sort of a wide-ranging role, producing regular market updates, thought leadership, and is really focused on being sort of an educational touch point for our clients. And most of those clients, of course, come from the traditional side of the investment world, sort of naturally being Fidelity Investments related. And so for those who kind of paid attention to the invite, we did have a last-minute switch. Chris Kuiper, our Director of Research, unfortunately unable to be with us today. We have a different Chris with us today. It's all good news. Chris Kuiper and his family, they have their third child on the way, just a little bit earlier than expected. So today we do have a different Chris Baker. Chris Baker is a director on our business development team. He's one of the earliest Fidelity associates, I believe, as a part of Fidelity Digital Assets. So he's been through waves of adoption and market volatility over the years, and his day-to-day is largely spent sort of connecting with our clients and potential future clients, many of whom, of course, fall into the investment advisor category. So, Chris, thank you so much for joining us so last minute. Did I miss anything there? Any additional context for our audience before we get going here?
No, I appreciate obviously the time and being on. Look forward to the conversation. As Jack mentioned, I've been part of this team since 2018, so definitely have seen the ups and downs of the crypto market, and excited to have the conversation with Tyrone today.
Great. Well, again, thanks for joining. And it wouldn't be a value exchange without an outside guest. That's really what the value exchange is all about. We haven't had one for quite some time, so we're hoping to get back on sort of a regular basis. But the whole idea of the value exchange is we bring an outside voice to come speak with our clients or our potential future clients. Today, we're talking about the intersection of advisors and digital assets. Who better than Tyrone Ross? Just briefly to sort of intro you, and then I'll let you sort of add anything else. Tyrone's up to quite a bit. He's the CEO and co-founder of Turnkey Labs, which is an API suite focused on providing crypto asset management data analysis and insights, as well as the president and founder of 401 Financial, which is a registered investment advisor. So kind of the perfect mix of digital assets and investment advisory. He was also the CEO and co-founder of OnRamp Invest. That's a digital assets platform focused on advisors and advisor education. And then in case you don't believe me, there's sort of a list of accolades and recognitions that includes Investment News 40 Under 40, WealthManagement.com Top 10 Advisors Set to Change the Industry, Investopedia's Top 100 Financial Advisors, even more recently, one of Barron's 10 People to Watch in Wealth Management in 2022. And that's cutting the list short. That's just to name a few. Tyrone, what did I miss? Any additional context for our audience who might be less familiar with your work?
The only thing that is missing is the son of superhero parents. That is it. And just to let everyone know, I am not zooming in from a white party in Miami. I am in La Jolla, California. But no, that's it. I think the main thing is I started out as a wirehouse baby at Merrill Lynch in 2015 when I got introduced to Bitcoin, and it kind of changed my life, and been dedicated to it ever since then. So it's been 8 years now. Can't believe it. 8 years in the space as an advisor and builder. So really looking forward to this conversation, and grateful for you all for tapping me on the shoulder to do it.
Great. Well, we're glad to have you here today. I do think one of the things, maybe to level set before we start, Tyrone, you added this context. We talked a couple of weeks ago preparing for this conversation and just thinking about, what do we want to discuss? We want to talk specific to advisors. And one of the things you called out was a lot of the feedback that you've heard from webinars and events when it has to do with crypto and advisors is that there tends to be less of a focus on what advisors actually care about, and it tends to be more sort of generalized. And so I think that's one of the things, especially for like me and Chris, of course, you're always going to have the advisor mindset. That's really what we want to hone in on today. And so maybe to start, Tyrone, maybe just give your sort of assessment, zooming out, looking at the industry between traditional advisors and the digital asset space, and maybe with some context of kind of the recent market events that have happened.
Yeah, I think that's critical. And I think that is for all of the products that have been built, for all the educational resources, for all of the panels and webinars like this, a lot of advisors leave deflated because it's not focused on them. And one of the things that I started to do 8 years ago, I was like, you know what, I'm always going to distill the information for advisors so that it's pertinent to us. But here's where a lot of these do not start. If you are a registered investment advisor watching this, your interest is different than an independent broker dealer or a hybrid advisor, or am I a wirehouse advisor where my mentor still is at Merrill Lynch, where he told me they still can't even mention it to clients. It's not supposed to be a part of the client conversation. So I think where you sit, a lot of folks in this space for years, which has been infuriating to me, is they just lump all advisors together. And even worse, they lump advisors with institutions. Break those out, right? That's incredibly important. And then when you look at the nuance of, let's just focus on a registered investment advisor, where I think those are the segment that can do the most. When you look at registered investment advisors, again, a very nuanced space. So I think just to put that together, we want to focus on gearing the conversation in those particular groups. I think that's what I hope to do here today. And obviously you guys know that space very well. And I think this goes without saying, so I'll just get it out of the way. For all of those groups, your brand matters. And because that matters, I think it's important for everyone to understand that, as you mentioned, this is highly curated. With me, I think that focus is to make this a very tight, concise conversation where financial advisors can walk away empowered with next steps. I always joke and say when I do talks, I don't like the Tony Robbins effect. I could walk on hot coals in front of 50,000 people, right? But then I get back home and I still have my same issues and problems. So we want people to be able to walk away just as empowered in the webinar as they do away. A few things that I think matters here, again, for financial advisors. Let's forget the last 24 hours. I'm sure there'll be questions about that. We don't need to get into that. But as far as advisors are concerned, I am certain there are some advisors that are watching this that use either one or both of those entities as a part of their practice, right? Coinbase Ventures was an investor in my last company. I was beaten like a drum to actually get us an integration with them. Know some of the folks there. Obviously, Coinbase is Coinbase, and Binance as well. So I think what advisors have always been concerned with is, and again, when I say advisors, ERS, registered investment advisors, will stay this segment here. Because again, I think if you're a hybrid, yeah, you can kind of dance around it. Independent broker dealers, wirehouses, for this purpose of the conversation, it's not really for them because they're just looking over the fence saying, man, it looks really dangerous over there, right? So if I'm an RIA and I wanted to set up a practice or I wanted to get involved in digital assets, the first thing was, is this a qualified custodian, right? And I think we're having this conversation where the new safeguarding rule or custody rule proposal is a big overhang in the space. Are they qualified custodians or not? Yes, there's the conversation of things that I've been saying, and I've been saying this for years, and it's funny, it's actually mentioned today. Coinbase operates as a lot of different things, a broker dealer, an exchange, so on and so forth. So if an advisor wanting to get into the space is used to having, all right, I'm using this particular entity as a custodian. I'm using this particular entity for trading or portfolio management and so on and so forth. A lot of that was cobbled together because the space was built for retail, not for advisors in mind. So we're trying to work back that data flow, that custody, clearing, settlement, everything back to financial advisors. It's still not there yet. So I think a lot of the news, even going out, and again, lots of things we could talk about. Terra Luna, we could talk about FTX, all those other things. I do want to bring up FTX for a specific reason as far as my RIA is concerned. But let's go back to September of last year. not because 401 launched, but because during a 2-week segment last year, there was a bunch of news that to me just kind of flew under the radar, right? And then we can go back to February of 21, which is also important to the registered investment advisors in this conversation. But September of last year, you had this cluster of news, which was NASDAQ mentioning, again, a traditional stock exchange saying that they would get into custodying digital assets. Yawn, right? You had news of more platforms being that performance reporting and portfolio data being available to advisors through BitGo and others. And then you had and I don't remember specifically what it was, but it was another piece of news where it was basically providing a gateway, right? These three pieces of news were providing the gateway for financial advisors to get access, not necessarily through a product, but through data, right? And accessibility, incredibly important. So anyway, I bring that up to say, to me, while everything else was burning down, there was news that I think was underappreciated and not focused on because it was, all right, yeah, the wealth managers are coming, And that part to me was very telling because if you go back to right around that 2018, 19, it was kind of the same thing. There was infrastructure being built. There was gateways happening, but it really didn't get much, capture in the news and was being talked about. And then you started to see it bubbling in 20, and we know what happened in 21. So now let's go all the way back to February of 21, where the SEC gave registered investment advisors, they put out a risk alert saying, hey, this is exactly what you all need to do if you want to remain compliant in working with crypto assets in the space. So that to me was critical. And I've brought it up in every single talk since, because one of the things that I've always said, there is guidance needed. It'd be nice if the SEC and CFTC got together. Looks like with the McHenry bill that is being put out there. But the registered investment advisor space did not lack for clarity. There was enough there to be able to run your business and move forward. There are RIAs that have gone through SEC audits already and has passed with flying colors. If you knew that these things were out there, let's go back a couple months before that, where they gave an update on broker dealers as well. If you want to register as a special purpose broker dealer, right? Ta-da, what news have we gotten in the last couple of weeks? There's now a special purpose broker dealer that can custody and handle, as they label them, digital assets. I use crypto assets for a specific reason and not digital assets, but we can get into that. So I think, to me, for advisors, that matter. Those were the things that were key that has happened over the last 18 months. Now, everything had happened if you had clients that were in the space and doing things away from you, because 90+% of all crypto wealth is held away from financial advisors. Now let's go to FTX. I'm going to give a real life example here of how, for one, we handled that situation. The Sunday before CZ tweeted, I was walking back from Whole Foods and my CIO texted me and he said, did you see CZ's tweet? I literally responded back, this whole thing happened in 32.6 seconds. And I literally just told him, move it. We had Bitcoin at FTX that we moved on chain, right? And I don't want to go, that's a whole separate conversation about on chain. I bring that up for this reason. Now, this is our treasury. We still don't have an offering for clients yet, but this was just our own capital. The reason why I bring that up is this. This is critically important because what you've seen since a little before that, 3 arrows and everything else, but from FTX on until today, what you've seen, and you guys have the data for this and we do as well, that movement away from exchanges and the ability and knowledge to be able to do that. Well, Tyrone, what does this have to do with advisors? Take us out. If 90+% of all of the assets are held away, and clients are doing this away, and it was built for retail, that means as a financial advisor, my clients are out there somewhere dealing with all of these landmines on their own. And you're starting to see that shift where now, is this an opportunity to move away from the trouble that, oh, this exchange is sued, this exchange gets a Wells notice, this exchange melts down, and now advisors have used them as trusted custodians. So anyway, I'm going on and on here, but I think that encapsulates the last 18 months for me, for an advisor, and looking at a lot of the things that have been, that has happened, that has been just under the radar and not really a big deal, but I think it's a big deal for the audience.
Yeah, so there's probably a million threads that we could pull on there, in a bunch of different ways, on the regulatory side, on the operational side, due diligence, maybe starting, sort of even simpler. You explain like having to move assets on chain, and I would be willing to guess that the vast majority of advisors that are tuning in today would say, I don't want to have to deal with all of the, like, especially in the broader context of when we think about this is a very volatile, early, nascent asset class. And when we're talking about position sizing, it's quite often less than 5% of a portfolio. And so what I would, tend to kind of hear or see anecdotally is, oh, well, we're just not going to deal with it because it's such a headache at the moment. And maybe this brings like Chris in the conversation as well here of just the idea of, has the sentiment around the space changed over the past year when you've had centralized custodians or exchanges or lenders that failed, and now there's a whole other element of due diligence that probably should have been going on before, that has to be going on? Like, I don't know, do you see the investment advisors' overall interest in the space, would-be investors are now no longer considering the space?
Yeah, I think if I were to speak, from our side, I think there's almost two pieces to it, Tyrone. I'd be curious if you agree. We've seen, everything that you kind of talked about, right? A lot of that turns into what? Turns into headlines, right? And so the average advisor, the average friend or family, they're seeing that and they're saying, this is negative, or this is, fraudulent. And I think what happens though is then on the other side, they still have clients asking about it. And so they're kind of stuck in this unique perspective of like, if you as an advisor don't have an opinion, or you have an opinion one way or the other, you do have to decide, like, of your clients, how do I end up helping them, right? Because you are seeing like they're stepping towards those landmines, or you're trying to help them avoid that. And quite frankly, like, you're trying to help your practice grow too, right? So if you can bring outside assets in, that's a positive. So I think, a lot of the work that we've seen is, interestingly, these headlines haven't really scared people away. I think they've just allowed them to question more and ask and be very curious about the space, and say, clients are still asking about it, but the headlines are negative. How do we figure out a way to move forward in a positive, regulated, comfortable manner if we don't think this space is going anywhere? And, Tyrone, you've been, I've seen you speaking in the space for years now, and right, like, we've been doing this now for 5 years as a business. And I think people see that, right? So we had a lot of questions over the last 18 months is, what is Fidelity's plans? And it was really exciting to say that we're doubling down, right? Like, we are fully committed, maybe in a quiet way, but we're committed. So I'd be curious, were you feeling the same, where you do see that kind of push and pull of, the news that you talked about, but then also like the client interest doesn't seem to diminish entirely. And so clients and advisors are having to navigate that appropriately.
Yeah, again, this is where I have the benefit of being a builder in the space and also being a financial advisor. So I get it from both sides. Here's what I find interesting. And I think to this point, what you mentioning, you all leaning in, what I find interesting, I'm blessed enough to have relationships with the leaders of some of the largest RIAs in the country. It's a no-go. They're not hearing it. They haven't been hearing it. There are certain things that they want before they're able to trust this. And I think if it's done anything in the wealth management space, sentiment is completely blown, right? There are some of us are cockroaches. We're never going to go away. We're staying. That's just what it is, right? But broadly, registered investment advisors, talking to some broker dealers, again, folks sentiment is blown. It's just, it's at the kiddie table now. What's interesting though, is that platforms that advisors use are leaning in. Why? Because the data is the data. It just trumps your feelings. And again, there's clear with however many, accounts it is now that is at a Coinbase or all these other, Robinhood and all these folks where retail has been able to get access. It's hard to ignore that. And you have clients that are using these platforms as, again, it's held away, being able to see those assets, being able to bill on those assets, advise on those assets, gives tax and estate and financial planning recommendations is still a huge opportunity, right? So I think it makes sense now where, as you know, the walls are melting down internally, it's okay, well, what's left? And what's left is we still have clients that are going to ask questions. There's still advisors that are going to move forward in building a practice around it. Again, even yesterday, news, it wasn't covered CFTC, you got CBOE now, you know, you got clearing agents and all these other things, so many different things here, futures markets becoming more robust. These are the type of things that the largest firms want to see. Now, to that point, from the advisor side, right? I was down at a conference 2 weeks ago. I'm, you know, finishing my workout. I'm walking, and I get a call from a gentleman who works at Bank of New York Mellon in a private wealth, and they have, you know, an older client, grandson, walks in, 14 million potentially in Bitcoin that no one wants to touch. Like everyone's like, no, I don't want to touch it. You don't want to touch it. So supposedly there's keys missing and so on and so forth. So you're getting these situations where this is happening, and literally, like, even on the call, I was like, we don't know what to do. We don't want to touch it. I thought of you. Can you help? I'm like, yeah, willing to have that conversation. So to your point, I still think there's conversations like that being had. But here's the one thing that I will say. I don't care who it is, and which is why I've been adamant about building my other company, is I don't think people appreciate the amount of accounts and data and wealth that is held away from the space, from the traditional custodians and the traditional wealth management platforms that they just are not aware of. And when they do, it's going to change. It's going to change the game. So I think once, you know, you all start to lean in more, and then advisors kind of have that connectivity to make it simple, right? I always use this example. As an advisor, we don't want to buy a $2 million condo and go across the street to use the bathroom. Doesn't make any sense. I want it all here, right? So once that's available in the platforms that I use, it'll make it easier for them to rebalance, to easier to see held away, to give estate planning issues, by the way, which is a huge red herring that nobody is talking about. The estate planning issues to come in crypto will be an unmitigated disaster. There's an opportunity there. So anyway, so we definitely don't have enough time in this webinar, but you know, there's so many things to cover, but I think you nailed it. It's a very nuanced conversation and issues for advisors to navigate with crypto assets.
Yeah, and I would just add on to that. I think we see that consistently, right? There's one or two clients or family members, right, that have a position, or they, you know, they raise their hand, you know, high enough that the advisor, you know, is willing to move forward, right? And it's a big enough relationship. They're going to help facilitate something. The fascinating, I think, exciting piece is typically they end up having some follow-ons where it's, oh, you know, one or two clients did it. Now all of a sudden we have 10, right? We didn't know that we had 8 others that were interested. And I think it just kind of plays the story. Like, there are those assets sitting out there, no matter how big or small they are, we continue to see those, you know, being held away. So it really comes back to like integrating and making it more seamless and, you know, quite frankly, just easy, right? Like, can we make this easier and less daunting?
The easy button.
So I think you guys are driving into like one topic that I definitely want to touch on, which is around demographics. And I mean, even part of like some of Fidelity's strategic initiatives of why there's been so much investment in this space to build out, you know, products and services in the digital asset space is that it leans towards a younger digital native cohort. And I mean, the facts are the facts. Like, people were opening accounts with these, you know, startup crypto native firms, and investing in some of these assets, and that was opportunity missed for traditional investment firms. And so, you know, we've gone forward with, you know, different solutions, and now there's even a retail product from Fidelity. But thinking about like next gen planning for advisors, I feel like that's a hot topic. Thinking about wealth transfer from generations, and RIAs and investment advisors that want to be around for the long haul, 10, 20 years out. Sure, we might have market volatility around Bitcoin and ETH, and it's a controversial asset class at the moment, but the structural building blocks of digital property and the ownership of digital property, and a younger cohort, like I think of me and like being the youngest on this call, my friends, nobody gets fired up or interested about owning gold in their portfolio, but a lot of people really interested in Bitcoin and ETH and digital assets that are my age. So how do you think about as an investment advisor, kind of looking at the bigger picture here. And like you said, not just telling a client, oh yeah, you can go with 2% of your personal portfolio and figure it out yourself, wanting to actually sort of holistically help clients plan, especially when you think about younger clients, which are the bedrock of a long-term investment advisory business, right?
This is the point in the webinar where everyone puts up the obligatory $68 trillion of wealth transfer. Every webinar has it. Well, 16 trillion of that, right, or billion of that rather, is going to happen in the next 3 to 5 years. And you can't fight the numbers, as you say. This is definitely a younger story, a digital native story. And I think it's one where if you look at, let's just say, again, that 20 to 45 segment, you kind of grew up doing a lot of this stuff from your phone. It was easy, you log in, it's seamless, and so on and so forth. And I want to tell a story. 2 years ago, I was in Austin for a meeting, and I got invited there, probably had no business in the room. You had a bunch of huge bank CEOs and everything else. And I was brought in to do a presentation to the group. And when the group broke, one of the gentlemen he was the CEO of a very notable bank that everyone here knows. And he said, Tyrone, he goes, he's like, I don't really get crypto. It's stupid to me. It's whatever. And I don't really care about Coinbase and stuff. I don't think they're really a threat to us. But he said, here's what worries me. I went and just played around with it and went to Coinbase and opened an account. It took me 3 minutes. You could walk into any of my branches right now, and it's going to take you 45 minutes. That's the part that worries me. So that's the part that I don't think is taken into account enough where people talk about this space. I have an example myself of so many people. I tell them, go open a Cash App account or just see how quick it is, just to see, right? Stand at a light, right? Across section, right? The light turns red, start, right? By the time it turns green, I'm certain you'll be halfway, if not done with that process. So I think the ability to get access to everything now, right? Jack, you guys are very much a now generation. I need it now, right? Go on my phone and get a car now. I order food, I get it now, right? I want my investments now. That's not traditionally how it works. Crypto markets 24/7, 365, overload, dopamine hits all over the place. That's one part of the demographics. The other part is where one of the reasons, and anyone that knows me and follow me, why I care about this space and what it means for people who grew up like me with no bank account in the house, right? And the data from the Fed, they just put this out in their home wellness and home checkup and well-being report, whatever it's labeled. If you look at the data, those that make 100,000 or more look at crypto as an investment. Those 25,000 or less do not. They use it to transact. That's a very big deal. As we sit here now, the majority of people in the South Bronx do not have access to banking. There are banking deserts in the United States of America, right? So we're getting fed now, great. But this is what I've always said from a demographic standpoint. If crypto has done nothing else, right? And you'll be hard, I'm the biggest crypto hippie you will find. I am punch drunk. But all it did was shine this light in the corner. Wait a minute. So the market turns off every day at 4 o'clock, and then you can't trade on the weekends, and then it's 3 to 5 days for my money to settle. So I can't put my check in the bank and then it settles. Like your generation is just not dealing with that. Like, why is this so slow? So crypto just shined a light on all these inequities. Again, the United States of America doesn't have a problem with equality. It's an equity. All these inequities in financial services in the markets. And then you go, oh, wow, okay. And then you look at the people that come to crypto, they look a lot like me, right? They're black and brown. They're LGBTQ. They're the segment of the population that have not been marketed to or served well. That matters. And that's what worries me about all of the rankering on the Hill about how this is going to be regulated in the future. And you guys have a pretty big platform. And I'm going to say it here because I've been saying it everywhere. Crypto has one inarguable use case, and I will argue it anywhere with anybody at any time. The one inarguable use case that it has, that so long as it exists, and since it's been in the world, It has been a huge disinfectant of showing the inequities of people who lack access to financial services. Hard stop. And I'm not talking about the global South. I'm talking about right here in the great United States of America. It's inarguable. It helps those people. And if anyone can show me hard proof that it does not, when the Federal Reserve said that it does, I would like to see it. So again, I will get off that soapbox. But as far as advisors are concerned, again, what is happening in financial services now is you have embedded finance, you got buy now, pay later, you got all these different things where people are getting access to, you got AI now. It's very easy to pick up a device and say, can I buy this house or not? My wife makes this, I make this, that, or whatever. Hey, we want to throw some crypto in his portfolio as well. What would that look like? The traditional financial wealth management space is not set up to deal with that. Now, to end that point, right, to put the ribbon on this, as you mentioned, the portfolios of the future will not look like the portfolios of today. That's old hat. I've been saying that on Twitter forever. Here's what's interesting. What happens when those portfolios that don't look like the portfolios that they do now are not managed by advisors like they are today? Client walks in and say, yep, I got $10 million crypto portfolio, but it's all on chain, Mr. and Mrs. Advisor. And the advisor goes, what does that mean? Right? ChatGPT-4, right? What is on chain, right? So when clients start to do that, and it's a mix of centralized things, it's a mix of decentralized things, where it's a mix of, I only want it on my phone, I want advice, you won't bill on my assets, all these things, it gets very, very complicated. And I think to that point, the way crypto has evolved and is evolving by the millisecond, when we get off this webinar, we're all going to have to catch up on 10 years worth of stuff in an hour, because that's just how the space moves. It's not set up for advisors to be able to capture that data, that information flow, and be able to act on it in real time. Once that changes, obviously with the help of you all and others, advisors will be more well equipped to handle that demo. But even without crypto, they're not prepared to handle that demographic shift. Crypto is just ushering it in faster along with AI, and it's going to force the space to kneel.
Yeah, no, those are all great points. And so to your point, to kind of what you were getting at, there is this element of the intersection of a new emerging financial system of sorts, right, that operates on its own merit, but there's an intersection there, right? And I like to say, like, if you think of something like Ethereum, a lot of its use case comes from having a tether to the real world and having real assets and having that ownership represented in a transparent way on chain. But none of that's going to happen without regulation and without a clear sort of connection between the world that exists under contract law and has a trusted element to it and sort of the world that exists under smart contract law. So when we look at regulation, you kind of mentioned it before, specific to advisors, where do you see, like, in terms of trying to make progress? We've obviously had some enforcement action in the past 24 hours or so that I don't know if you have any thoughts on, but
yeah,
there's the landscape on the regulatory side. That's something, a piece that's been missing, and something we often hear when we do our institutional investor survey. There's always concerns around the regulatory environment, and arguably rightfully so. We don't have full clarity there yet. And so at the moment, there is an element of sort of ambiguity around a lot of these assets.
Yeah. So now in this part of the conversation, my hybrid independent broker dealer wirehouse advisors have entered the chat. Why? Well, if you look at what's happening here, yesterday with the enforcement, 12 assets that are potentially securities, I believe, with 13 today. There's some overlap, some that I don't actually like to see on there, but that's a whole separate conversation that I think have a good case. Why does this matter for advisors, right? One is a custodian to be able to hold assets that I am going to advise on. Again, and with this new custody rule, they're putting a lot of burden on the advisors to know the custodian. You got to know your client. You got to know the custodian. You got to make sure they're segregating assets, all of these things. Segregating assets. I'm going to get to that. But if there are securities, that changes the game, because if I am a Series 7 registered rep, it's kind of, all right, we're talking here. And then we start to get some broker dealers that are registered in custody. Now we're kind of in the conversation. Get regulated entities. I'm a Series 7 registered rep. These are securities, right? Again, RIAs now say, okay, they've just kind of been moving forward because again, I mentioned they have had some clarity, but now you have the new safeguarding rule. You have, okay, well, now advisors that have been using these existing qualified custodians, perhaps, not really sure. So there's a lot of things that are in flux here. So I think what advisors want, again, as I mentioned at the top of the webinar, it would be awesome if the SEC and CFTC got in a room and gave some unified guidance. I, along with others that I know you all that are watching this webinar, have had conversations with the SEC and given them some guidance on what I thought was best for the space. So now, once we know, should exchanges be regulated? That's to be debated, right, and argued. But by who? Advisors would want to know that. Is everything here is security? Okay, great. That opens up a whole nother space for broker dealers to get registered, special purpose broker dealers and others to get into the space. For RIAs, okay, Bitcoin is a commodity. We're in the balance on ETH, but I think we'll put that in that bucket as well because Gensler doesn't want to clarify. And then there's everything else. So I think advisors would simply need to know that, right? Because again, if I'm a hybrid, I have one foot in one world and one in another, so I'm forced to do nothing. My clients want advice, I cannot help them. And I think here's the most frustrating thing for me as an advisor, for the advisors watching, is this. We are servants. We serve the greater public. We are highly regulated and do things in a particular way so that the SEC and FINRA and others can make sure that we are doing right by our clients. You're hamstringing the space now for being able to help people. And I'm not talking about advisors going to have a client YOLO and a 90% position into Bitcoin. I'm talking about a client that would walk in to Bank of New York Mellon or wherever else and everyone throws their hands up. We don't touch it. We don't want to do anything with it. So I think clarity will simply allow advisors to have, and again, you can have conversations now, again, depending on where you sit. Wirehouse advisors can't even do it. But if there's regulatory clarity, we know there's regulated entities, we know there's oversight, we know there's transparency, we know everything that needs to be done. Now it's easier for Merrill Lynch or Morgan Stanley, JP Morgan, Cetera, all of these folks to say, okay, great, open up, let's start having conversations with clients. Go back to what I said at the beginning of the call. All regulation is going to do is allow advisors to give them a roadmap to start having conversations. We are only talking about these. I'm a registered rep. These are securities, commodities we may not touch. But then it's the clients to say, okay, well, I got a Coinbase account, I had a Gemini account, I had a Robinhood account, I had a crypto.com, I had a Celsius, right? And then they go, oh my God, right? And look at all of the opportunities that is missed here. Again, to be servants, we serve, we help people avoid issues and scams, we help them save, we help them invest, we help them build financial plans. But that dark hole over there that could be any amount of money that is material to your well-being, I don't want to know about because the regulators tell me I can't touch it. Sorry, Mr. and Mrs. Client, but you see that holistic financial planning shingle that I hand outside? I'm a holistic financial planner, so long as it's not that stuff. That has to change. And I think that's what Gensler is holding up here. So I think even the guidance that we've gotten from our counsel, he specifically on purpose to nudge us, he always says crypto asset securities. He's like, we will operate as if they're securities, period, right? Pepe coin, Bitcoin, all the coins, he doesn't care, right? Because he's like, this is just the only way to protect yourself against everything that we see happening and imploding in the space in real time.
And I think that's a good point. I think you said it well with the roadmap, right? Like that's what people are looking for. I mean, that's what we hear the most of, right? Like there are teams and there's a good portion of our client base, like institutional, like direct custody offering, like, they are wealth managers, right? Like people have figured out a path forward, they've taken the time and they've done it. But I won't say, and I empathize with it, it's not the easiest at times, right? Like you do have to navigate the regulatory side. You have to educate your team internally. And so I think I just fully agree with that, like building and giving people a roadmap to say, here are the regulated service providers, here are the assets that you're looking at, and here's how it complies with, everything else you do with your business. Because I think one of the biggest things that I see is teams don't want to spend 50% of their time for a 1, 2, 3% allocation, right? Let's try to find a way that that's maybe, 1 to 10% of your time. So I think you're hitting the nail on the head. I think it's a space that is evolving in real time, and I think we're getting better clarity, but it does probably, take a little bit more time. And it is something we just see, day to day. It is changing before our eyes. So, it's something that Fidelity is trying and, doing our best. I don't know if, those on the call know that we have a government relations team. That's a lot of the work they do, right? So they're just kind of down there in DC and trying to understand. And Tyrone, maybe you've connected with these folks in the past, but trying to understand the different initiatives that regulators are taking and making sure Fidelity's kind of pushing initiatives forward in the best light for, investment advisors and what their practices need.
Yeah, I've been blessed enough to sit and be a part of the SEC Investment Advisory Committee meeting. I've had multiple conversations with Hester. One recently, I've spoken to Commissioner Crenshaw's office. I've had a closed door meeting with Cory Booker. Like, I'm really trying to get out in front of this and just let them know, again, what we do as public servants to serve. That clarity is important for us to just simply feel comfortable to move forward here and do all that we need to do, but it's just a small segment. So to your point, I just want to say this really quickly. From that operational standpoint, yeah, why would I have a 1% allocation on 1% of my book of business for 150% of the headaches, right? I have to go find insurance. I have to deal with a compliance. I have to do all these other things. So you have to think about it. If I am, and let's just break the space up into 0 to 50 million, those that are 110 million or more, SEC registered, having to deal with that. And then those that are $1 billion or more, and then those that are 10 billion plus, again, 50 billion, $100 billion RIAs, they are not dealing with this until they have everything that they need, because again, operationally, we have to do this across so many different firms and so many different clients. And then that liability, the first client that complains that X firm did this and they get sued into the Stone Age, advisors have so many ways where it's more pitfalls and questions now than solutions. What's exciting is what you're seeing, even with all of this happening. You all, again, the news yesterday with, CBOE and all these other things, you're starting to see the seeds of development and the infrastructure that is needed for wealth managers to move into the space, right? Clearing agents, qualified custodians, exchanges, broker dealers, everything where everyone feels comfortable, everything is transparent, accounts are segregated in name, in street name, all these different things that doesn't exist now. How about the custodian just simply being able to send a statement to the client's house, right? These are all things that I think advisors would love that's just not quite there yet.
Yeah, I think, Jack, maybe just one point on that. I think one of the exciting things, right, is as Fidelity, right, we've worked with thousands and thousands of RIAs. So I think a lot of the work, right, that we're doing behind the scenes now is really exciting in the sense that's kind of the next phase, right? We know the clients, we know the needs. We've kind of built this custody offering, and it's how do we start to integrate that directly to the offerings that they already are assimilated to, right, and they use today. And so that, I think, is where we do get closer to that comfort on the operational side. And then guess what? It goes back to, doing the education and the investment still. The teams will need to go through. It's a necessary component of it. But if Fidelity and others can build that infrastructure, we just get that much closer to making this more of a palatable space.
Yep. One last point on that before we move on, Jack. Think about this. I'm an advisor. I want to start a firm, right? And I go, all right, I just want to start a firm. I need a custodian. I'm using Fidelity, checkbox, right? There are so many things in that comfort of what I just said that so many things an advisor doesn't have to worry about. And let's just be honest, and I've been saying this for years, they've basically been saying it's a higher bar for an advisor to use crypto custodians than traditional custodians simply based on that choice, right? Like you got to really go through it here where an advisor doesn't necessarily have to do due diligence. I'm picking Fidelity and then they'll figure the rest out and I'm just comfortable with that. With that, though, comes along with, I know all of the operational, regulatory, fee generation, all these other things I'm going to get from using a Fidelity and not being able to do this on the other side. So similar to what I was doing at my last company and so many other companies are doing is trying to be that layer to make it easier for advisors to do that. But what this new safeguarding rule is doing is forcing now the custodians to operate in a way that is easier for advisors to get access, but again, there's so many nuances there of the operational side, but I think we take for granted that an advisor just can't do it without so many different hurdles, which leads back into the original question, but all great points by you, for sure.
Yeah, no, all of that's great. We do have a lot of content that we didn't get to. We want to filter some Q&A from the audience in a minute or two. Maybe one last question that we can touch on here. Tyrone, if you could boil it down into one thing, what's the biggest misconception around the digital asset space, and ideally specific to advisors in your view? And Chris, maybe you have one as well from your experience.
One thing is tough, Jack. That's
Like, Chris, you go first. I think about that. There's so many.
Sure. Yeah, I'll touch on it briefly, and Tyrone, I'll let you speak further. I think the biggest misconception in my eyes is that this space can't be touched, and I think that kind of boils down to there aren't options out there, and I think there are, right? So a lot of our clients are wealth managers, so there are paths forward, whether it's investment products or platforms where you can get access to spot exposure. Obviously, I'm a bit biased, right? I support a business that has been building that for the last 5 years, but I am very excited about kind of the next iteration of it. We've built this direct to clients, but now we're building it, within new platforms or existing platforms that people already use. So I think both from a regulatory, we've kind of touched on probably the positive and the negative, but there is a path forward if people do have kind of the conviction or the client's demand, and it's strong enough to move forward. So I think that's a misconception. There are many others. So I'll let Tyrone, if there's, specific ones you're thinking about as well.
Here's one that I think it's that my clients don't own it. I think that is the biggest misconception. Whether it's $5 worth or $5 million worth, I just don't think advisors appreciate that your clients are doing it away from you. They just are. And the way I relate that is this: we've all, as advisors, had that client that comes into you and you're doing a review and you're getting everything and you're like, this is outside of everything else. And like, oh yeah, I bought this penny stock. Oh, you bought penny stock. Great. Oh, well, how? It's $500,000 worth of a penny stock. Nice. Right. So they're doing it, right? They have their fund money. They're doing this similar way they did it before, but they are moving around in this space. And I think that's one, and I will, and Bitwise has some really good research on this, on the advisors that have clients doing it is, low. And then the advisors who are actively doing it themselves is way higher than those that are actually allocating on behalf of clients. But I will say that the other misconception of that is I think financial advisors discount the financial advisors that are actually in the space doing it themselves. I get a lot of closet DMs from advisors asking questions about, hey, should I do this? And what do you think about this? And I'm like, ooh, look at you. So I think those are the two big ones.
So the average presentation we do, it's probably 50-60% of advisors raise their hand that they personally own, but then it's maybe 1% like, the clients have been allocated on behalf of the financial advisor, which I totally get, right? It's touched on a lot of what we spoke to today.
Yeah, I grew up in a Caribbean household, and those that are Caribbean watching this will understand what I'm about to say. You're constantly told, do as I say, not as I do.
So now, hopefully we can get to some questions. I think someone was maybe going to pipe in the questions for us from the audience. I'm not sure who that would be on our side.
Yep.
Oh, there we got Steve.
Yep.
I didn't even see there's emojis here and everything, man. Look at this.
Leave some space for the emojis. Hey guys, thanks so much. Handful of questions here. We'll try and get through as many as we can. First, maybe for Chris or Tyrone, how do advisors see what their clients are doing in crypto? I think kind of asking how you get into their workflow. Either of you guys want to take a stab at that?
Oh, we definitely don't have enough time for me to do that. Chris, I'll let you go. Hey, you said it from it. I can throw
Sure. I'll just quickly say, I think it's as simple as you have to ask the question. And I think the step before that is you have to equip yourself, right? We're all human. I think I'll speak for myself, right? I wouldn't want to open up a conversation I don't feel comfortable having follow-up questions or follow-up answers or some sort of guidance as far as like, what can I do to ask that question and have some sort of perspective on it? So I think I've seen a lot of advisors be hesitant in even asking the question, do you own any outside, crypto assets? But I think that is really the only way, right? Clients would have to tell you. There's not a, public disclosure that they have to make, in any some sort of way. But as Tyrone said, a lot of clients do own it. It's not everyone, but clients do own it. And I think just asking the question could be pretty eye-opening.
I think, yeah, that's it. Is all right, have the client conversation. That's the first step. And then the client tells you where they have all of this crypto, or they do have it. Now the advisor, can I see it? How do you go about getting that data or that client data into your platform? If there's transfers, there's transaction data, there's all these different spots. Some of it is in a hardware wallet, so on and so forth. How do you do that? Right? And I think that's an issue to be solved, but that's a big point here, because again, to the point that I was saying before, if I got to go across the street to use the bathroom, that's annoying. But if it's right here where all of that data is in again, there's a holy trinity for advisors: my CRM, my portfolio management software, and my planning software. That's where it all happens. And the portfolio management software is the heart. Everything happens there, right? And once that's in there, it's easy for me to see, it's easy for me to rebalance, it's easy for me to do all these things. But if it's not there, it doesn't exist. And if you aren't in advisor workflows, you do not exist. So if I can't see it, I can't be it, right? So once that conversation is the first piece, then the other thing is asking, I've said this before, where is it, right? How much, what is it? Rarely the client can answer the three of those. They can just tell you they have it, but when they do, how does the advisor get that data from a Robinhood or PayPal account or a Coinbase account or whatever into their workflows to sit it next to the traditional assets and give the client holistic advice?
All right, great. Looking through a handful of questions here. Maybe for our team, Jack or Chris, how can Fidelity's retail offering be extended to my clients? Jack, you've spoke to our retail customer audience quite a bunch on different webinars and such. If you or maybe Chris want to sort of touch on that.
Chris, I'll let you.
Yeah, I think so. As far as the retail offering, so that's something that we created. Basically, Fidelity Digital Assets is the back end of it, and then the retail offer would be linked to a brokerage account. So it's really, I'd say Fidelity over the last year, what we did is kind of build towards all the existing main business lines of Fidelity. So it's really the retail side, we have the 401k side, and obviously the Fidelity institutional side, which is really catered towards family offices and wealth managers. And so we're seeing different culminations of Fidelity basically integrating those offerings to existing, right? So like Tyrone said, like putting those assets next to your equities and your fixed income, all of that to make it easier, right? You see it. So now I log on to fidelity.com, or, if you're in the future, right, if you're an advisor using WealthSkip, you can start to see that within the same integration platform that already exists, right? So you're seeing Bitcoin, Ethereum right alongside equities and other assets. That to me is, the first step towards kind of heading off to the races. And I think that's really important. Steve, did that answer the question? I apologize if I missed it slightly.
Yeah, that's great, Chris. Tyrone, not sure if you have anything to add there as well. Otherwise, I can get through a couple more.
Oh, he said the key word there, WealthSkip. That's it.
Great. Here's a good one. I'm a younger analyst for a firm that focuses on a client base that is near retirement. I would assume 90% of our clients either don't know about the space or don't care about it. I want to build the idea of entering into this space, but don't know how to approach it with my superiors and colleagues. Tyrone or Jack?
Oh,
I mean, I can.
yeah.
Jack, do you want to touch on
Start.
research? I think
That's the layup for you.
Yeah, from the research angle, we tend to talk to a lot of folks at investment shops, and some of them have investment committees, some of them don't, but it tends to start with like one, you almost call it like a torch holder of like the person that has gone down the rabbit hole, is really passionate about Bitcoin or digital assets in general. And I think all of it is just core to this idea of education and the fact that you're not going to change somebody's mind overnight, but it's a process, and it's all about like education and touch points. So if somebody knows that, hey, I have respect for this person, they're a smart intellectual person, and they're really passionate about this, I think oftentimes they'll hear you out even if they're skeptical. And like just sort of being that one touch point and making sure it's known. And then all of a sudden, at some point in time, they hear about it again, and it's in a positive light. And knowing that it doesn't happen overnight, but that we've seen like whole investment committees that get on calls with us from large institutions, and the vast majority of them are skeptical to start, but like we just have one or two conversations, and all of a sudden, they're not changing over their portfolio overnight, but now they're more open to it. And it's like things don't happen overnight. So having those conversations, I think, is a huge piece of it, because it's all around education. This asset class is so much different than traditional equities and fixed income.
All right. I don't know who it was, but if you, the name of the person asked the question, but here, if you're there, lean in. Here's what you do. I'm going to give you two options, right? People don't care what you know till they know how much you care. So two things. One, you could either really beg them, right? Set up a conference room and say, hey, you guys give me 10 minutes. I just want to show you something. And you choose, just show them how to either open an account or how easy it is to move money from one pocket in crypto to the other pocket of crypto. That's one. The other thing is you say, hey, I know operationally we are doing these things. Pick the major pain point where you hear all the elder folks in the firm complaining about constantly. Make a note of that, how many times they complain about it, and then say, hey, I promise you there's something in the crypto ecosystem that'll make this easier. And then they will absolutely hear you out. But one of the things that running a firm and doing things, a lot of pain points, a lot of issues, a lot of paperwork, a lot of nuance. If you can find a way to just show them, not that they would adopt it, but just to show, hey, Mr. and Mrs. Firm leader, this is a use case that I think is going to develop that'll make your life easier. They'll hear you out.
One last thing to add to that, Tyrone, is like, and I think Chris would agree with this, we get on a lot of calls with, skeptical folks from the traditional side. And I could guess 9 out of 10 of the questions that we're going to hear, because it's always reverting back to the same valuation, regulation, environmental concerns, volatility. Like it's always the same pain points. And so it's like sort of having an answer matrix to some degree of if then, of understanding what are the big questions and concerns, and being able to sort of alleviate those, I think is a big piece of it too.
Yeah.
And I might just have one note. Like, I think we've mentioned a lot about younger investors are interested in this, and like older folks, there's generational transfer. Maybe they're less. I think what I've actually seen in reality is you get surprised on both ends, right? I have friends that are my age that they think this is, they don't have the answers. They're not really comfortable with it. And I've also, I onboarded a 98-year-old, right, to buy, I think it was $10 million of Bitcoin, right? So you do see people kind of open their eyes to new ideas. And, I don't want it to be taken as, it's just younger investors, right? It has been a very wide range. And I think, Jack, you actually spoke with that gentleman at the time, right? So you do see, a very wide array of people that are investing in the space, which is exciting. While it is, mostly younger, but it is definitely wide ranging.
So to that point, really quickly, I have to say this. On board a 98-year-old client, $2 million of Bitcoin. Here's the other thing that advisors want, right? I onboard these clients somewhere, beneficiary forms, right? Different type of account style types, right? Joint rights, tenders of ownership, all these other things. Those little things are still missing, right? Because again, if I'm an advisor and I'm helping a client with that, the estate planning part of that is critical. So I want to make sure where it's held, how it's held, and what type of account. Is there beneficiaries that could be listed, or so on and so forth? That's a really big deal that, again, eludes us in 2023 in the space as wealth managers and advisors. But I'm glad you brought that up, because that's something that is really key as we move forward here.
Yeah.
One more?
Leave it there, Jack, if you want to take us away.
All right. So I think that does it for us. Before we leave, a couple of quick things. Tyrone, people that want to follow you that didn't prior, where can they go to learn more, hear more from you?
It's obvious where I am, but I do want to take the time to say this. Crypto and all of this is great, but the problem right now for me is that somewhere in America there's a hungry child that cannot learn because they are hungry. If you found any value in this whatsoever, there's an organization called NoKidHungry.org. I'm not affiliated with them in any way, but go there and donate $2, $5. So there's a child somewhere that can eat and learn about crypto, so they could run Fidelity one day.
Well, I love it. Such a humble way to leave it. If anybody's looking for on the research side, fidelitydigitalassets.com/research. We open source sort of all of our research, but I think that more or less does it here. I think this went really well. Thank you, Tyrone, for joining us. And if anyone has any questions, feel free to reach out. We can get you in connection with the right people. So
Thank you for having me. This was awesome. Thank you for everybody for joining. Appreciate you.